Hi, this is Ron Janish, and this video is about the OR technique. Now, the origin of all this is in the writings of Andrews, which of course you get with the expanded course. All of his writings, all that we could find, and we do search high and low for this stuff. And in part, it says, OR seems appropriate in order to save words, for it is rich ore and there truly is gold in them their hills and valleys of price fluctuations in stocks or futures. You'll see this in reasons for action column in this week's letter, that the OR is enabled, yada, yada, yada. And then he adds several charts where he actually shows what the OR method is. This was done first and foremost in March of 1974. And all the originals and copies of all the originals, of course, are in the expanded course material. And what we've done is I've done a bit of research with this. And he always says, you know, take this stuff, make it your own, modify it how you feel comfortable with trading it, and go for it. And so I call it and label it your own. So I call it the ORRE rather than the single one. And here's some charts we sent out today. Now this may look like a pitchfork, and to many it is, but those of you that are course members know better that this, while this looks like a pitchfork, it really isn't. It's really a Babson line. And the other day I had somebody ask me, well, gee, prices go up to the median line here, or this red line here, am I going to sell? And the answer is not necessarily, because remember, I'm looking to use this blue line here as the projected reversal point. And so we'll see over time how this works out. Okay. Remember, today is the 14th, and we'll see in a moment what else has happened today. Okay. So yesterday I wound up getting another ORRE, another OR signal in the hogs, and we'll see how that works out. And on Friday, there was a crop report. And so when prices came down here, I wound up buying a bunch, and that was based on the OR signal. And then here we have another one. So let's take a look a little further and see. Boom. Okay. This is this morning. Now, notice it says here average price. Okay, it was $8.77. That was on Friday. That's what they were bought for, and they're at presently at $9.15 and a quarter. So down 25 is only what's happened in the last few hours, minutes, however IB happens to do this stuff, and really isn't the facts, because the facts are if you buy here at an average price of $8.77 and it's here right now, it's up a bit. And just like a few moments ago, we wound up going short the gold, and that's because we had a sell, an OR sell signal in gold, and we wound up selling at, it says here, average price 37, I guess they're taking off commissions, and right now it has a plus of $368, and that's because the last price is 74. So I guess when you go from 77 to 74, you go up a little bit. Okay. So anyway, let's take a look at actual charts. Is that it? Yeah, boom. Okay. So these are the soybeans, and our longer term target on the soybeans is much up here. So we'll just leave this alone. Let's see if we can find a gold chart. Gold. Here we go. Yeah. Here's our gold chart, and what we're looking for is for gold to come down significantly and probably hit or go past this red line. And this is the OR technology that we're going to be putting into the software that's presently being designed. Okay. Let's take a look and see how the S&P is done this morning. Where are we? There we go. Ba-dum. Okay, all this gibberish here. Let's take a look at this. And let's simply, the heck, that's the euro. Wrong one. Where is the ES? I don't know. Here we go. Okay, so here's the line. Remember I sent out a chart when it was about here? Okay, and so it's been slowly but surely going up this line. Okay, and what we'll do is we'll re-examine the chart at a later point in time to determine where we might want to sell or exit or go short. Okay. Okay, so anyway, so Andrew's had this incredible OR technique. If you want to learn more about it, you've got to read it, read the original Andrew's material, and there's just tons and tons of charts that go with it. And the one in particular that comes to mind is one that's on the New York Stock Exchange chart, and he does a really good job of explaining it there. So that's what we're looking at when it comes to the Andrews OR method. I'm doing my thing on it, and it's going to be a bit different. And so in order to signify that it is different, we're going to use that extra R in the name and go from there. But anyway, just for grins, you're probably going to see this video after I post it, which is going to be in a few minutes. And at a later point in time, see what happened with prices. Okay. Anyway, I thank you for your time, and see you next time.